Hello, Jim here. A great way to make extra income every month is by selling options. Now, when you pair it with dividends and interest, you can make a substantial amount of money. Today, I want to share with you my trades from last month. I'm going to go through each trade and talk about why I made it and how it worked out. I'm also going to go through my strategies and my multiple income streams. So stay tuned. I think you're really going to enjoy what I have for you. Let's go ahead and jump right in. I do like to give a quick market update. The only thing that's really changed recently is inflation really seems like it's not going away. Originally we were thinking we'd have 6 cuts this year, then 4, then 2, and now there's an actual possibility of an increase before the end of the year. So I'm not sure we can bet on any kind of a cut this year. Probably the bigger deal is financing these huge debts that the government's taking. I have noticed, or I've heard a few podcasters talk about that they are having a tough time with funding the huge amounts of debt. So it's just something to keep in mind. I think high rates are going to be with us for a long time. Now, if you're someone like me who's nearing retirement and you need good interest, then it's not necessarily a bad thing. I remember my parents being devastated when the rates got cut so much. They were living off some pretty good interest in the early 2000s. I think around 2008, 2009, when they lowered the rate so much, it really had a major impact on retirees. So in a way, having the higher rates can be a good thing. It's not just necessarily a bad thing. So that being said, where do I see the market going? I think we're going to continue kind of going sideways. It is an election year, so I do think we're probably going to end up higher than where we are now. Will it be substantially higher? That I have no idea. The one thing that is predictable about the market is that it's unpredictable. So, and I think that's going to continue. There's so many weird things going on right now. So let's jump into the main part of the video. Now, I like to emphasize that for me, I've been a long-term income investor. I don't take huge risks on any one security. I do many more securities. So I do both stocks and ETFs. And I don't throw too much into one particular stock. I really like to take, I like to sell my options on many different securities. So a lot of times what you'll see here on this channel are a lot more, more of a diverse group of companies and securities that I'm investing in. I feel like at times if you put too much weight into a particular security, an example is Palantir. I believe some YouTubers are putting huge amounts of kind of bets on Palantir. I like Palantir. I do think it's going to go up nicely. But again, like any other company, something can go wrong. A CEO could leave. They could have accounting issues. So just don't put too much emphasis in one company. Don't, bet the farm on one company. To me, investing is slow and steady. I like to share what Warren Buffett talks about. What kind of time frame is he in? He's in a forever time frame. So, and that's kind of how I look at it. I got some great advice as a teenager from my grandfather, probably close to 50, 55 years ago, where he shared, live on the income from your portfolio. Don't spend the assets. Try to keep the assets, in such a way that you can pass them to future generations. So I do like to share that because I do feel like at times, and I see it with members who come into my membership, that they sometimes are putting too much emphasis on particular stocks. And in some ways, they want to do that. They want to take a little bit more risk. They want to have fun. If you're going to do that and you do want to take more risk, then, siphon it off into a smaller account. Don't do all your trades very, very risky. So with that being said, one of the great things about selling options is you can really produce some significant income in your portfolio. This month I'm probably going to beat last month, and then last month I beat the month before. Now, I don't try to get huge amounts of income. I try to get enough that I can live off it and I can grow my retirement accounts in a nice fashion. So having multiple income streams really does make a difference. So I kind of almost break it up into like 4 or 5 income streams. I might look at The premium from selling puts is one stream. The premium from selling calls is another. You don't necessarily have to put all your premium from options into one category. And the main reason I do that is in my brokerage accounts that are taxable, I primarily do covered calls. Now you might ask, well, that's probably not a good idea because you're, gaining a lot of income in that account. But part of the reason for that is in my invested accounts, my brokerages, they're mostly invested. So I have stocks. That's where I have, my Coca-Cola, my Procter and Gamble, my Southern Company, just to name a few. I have quite a few others. I also have Bristol Myers, 3M, and so on and so on. So it's mostly invested. I have maybe 20% in cash. So I end up writing a lot of covered calls. Every position I have in that account is rounded to the hundred. So I typically, not everyone, but probably 95% of them, I do have, I think, maybe 40 some odd shares of Home Depot. And then I think I do have some SPY, like 10, 12, 15 shares. So not all of them are 100, but I do try to get to a point where I can start selling covered calls. And for covered calls, you need at least 100 shares. And then I find doing vertical put credit spreads and cash secured puts and even things along the lines of iron condors or pour them in covered calls within my retirement accounts. Because again, if I'm producing a lot of income, and I definitely produce more income with my puts, then that's being siphoned back into purchasing more shares and making more trades, especially as things get assigned. When something becomes low enough and it gets assigned, I'm building up cash to cover those assignments and to pick up good companies at good prices. That leads me to my next important point. So I also like to set goals. So I shared my trades in February and January, and this is March. So now I'm to a point where I can quarterly, and I probably will within the next couple of weeks, look at how I'm doing. How can I change things? Like one of the things I've changed recently is I've moved all my accounts over to Fidelity, all my retirement accounts over to Fidelity. So I've got retirement at Fidelity and I've got brokerage taxable accounts at Schwab. And that has worked out really well, primarily because Fidelity pays such good interest and it's a true sweep account. So I don't have to worry about moving money in and out of money markets. Any cash that's there is earning interest, and that includes cash that's being used for cash secured puts or vertical put credit spreads. It also allows me to kind of handle it a little bit differently in Fidelity versus Schwab. Like I said, I do more calls in my Schwab accounts and more puts in my Fidelity retirement accounts. So, and I'm also setting goals. So I'm trying to increase that account or my Fidelity accounts significantly over the next year. Literally a year from now, I'll be 59 and a half, and I'll be able to start withdrawing funds if I need them out of those accounts. If I don't need it, I'm just going to leave the money in there and continue to do the same thing I'm doing currently. But if I do need it, at that age, I can go ahead and pull some funds out and pull out as much as I need. I don't necessarily need to pull out a certain amount every month, but again, that may be based on a monthly need. Currently, I have not needed to do that because I do have a Roth that I could have pulled some money out of. So that I've decided on different goals for my retirement account. So I have what I call my Fidelity IRA, which now is a combination of 3 different accounts. It was my 401k from AT&T that I rolled over into an IRA. It's also my IRA from Schwab that I moved over there. And it was my SEP account that I had for my business. I also rolled it over there. That was kind of a mistake. I was planning actually to put it into a different account, but I didn't mention that to them. So they put the funds right in there. Now I still have my SEP account at Schwab, so I may start funding that again if I need to, because it's tied in with my S corporation. So I'm looking at different goals for each account. So my IRA, I'm trying to do between 1 and 2% on a monthly basis just for premium, not including interest and dividends, and not including appreciation of the assets, because I do have quite a few assets in there. And then for my Roth, I'm going to take more risk. I'm hoping to do 2 to 3% on a monthly basis and take a little bit more risk. I might buy some riskier names or some names that I might not buy in my regular accounts. with again the goal of trying to get a higher return. I may also put into place. Maybe I'll close most of those trades at 70% in that Roth. But again, treating it differently so I can compare how I'm doing in those different accounts. So, and I encourage that. I encourage you to take the time to set some goals. Set goals by each account. If you have multiple accounts, if you only have one account, then that's a little bit easier. And then set an overall account. Where do you want to be at a certain time? How much money are you bringing in? I set goals by how much income I'm bringing in. So I'll set, I want to earn $6,400 this month, not including dividends and interest. And then I increase that. So I share all this stuff with my memberships. And at this time, one of them, my main coaching membership, is full, but whenever someone leaves, the door kind of opens again and someone else can jump in. And then I have two other levels. One of the levels is free, or actually the other two levels are free for the first week. So you can give it a try, see if you like it. It's growing nicely. I may stop the free aspect for my middle tier account, mainly because I've had some spammers kind of come across using the free membership. So I'm still playing with that. I want to offer it, but if it's people are gaining access to Discord, and it seems like they only do kind of nasty stuff in Discord. They're not really nasty. They end up spamming within Discord. I don't typically get that with Patreon. So it's something I may look at removing the 1 week free for the middle tier. So the two top tiers would not be free. And all the details are below. So if you want to take a look at my memberships, also I'm an affiliate for bar charts. It's a tool I use as well as Seeking Alpha. I use Seeking Alpha more for fundamentals, and details for that is also down below. If by chance you're interested, if you do sign up through my link, I will get a kickback, being that you actually commit to them and stay with them. I believe bar chart, it's a month for free. And I think Seeking Alpha, you may get a week for free and then a discounted price. So it may be worth your while to take a look. So the other important points I wanted to make, other than setting goals and trying to improve upon yourself, I do things very slow and steady. I don't make major changes or moves. I'm almost like a captain of a cruise liner. I do small changes, and then slowly they have an impact over time. So I won't majorly change something. I'll just do very small changes and try to improve upon it. And some of the things I've learned over the years is to be consistent, find something that works, set guidelines, and stick to it. And if something's not working, then do some research and make some adjustments, but consistently try to trade in a similar format using specific guidelines. Also be patient. Sometimes, stocks will bounce around. They'll be in the money, out of the money. It may show as a loss at one point, but being patient and not panicking is a big deal. Now, I've panicked from time to time, and I'll talk about that at the end of the video. Like with Tesla, I recently panicked, and I'll talk more about that at the end of the video. I ended up rolling and buying a put to protect myself from the downside with Tesla. I really thought Tesla was going to do a major dive versus the massive increase that they had this week. So, and again, I'll talk more about that at the end of the video. And the other important point before we jump into the trades is I do a nice balance of puts and calls. It's not 50-50, but it's probably more like, 35-55 or 65, something along those lines. I probably do maybe, one of every trade is probably a call, and that works out well. Plus, I end up closing a lot of my calls if we have a major dive in the market, or if the market goes way up, I can, close a lot of my puts that have become very profitable. So I encourage you to do both and don't necessarily stick to only one strategy. Stick to a few safe strategies. Like I said before, I do covered calls. I do cash secured puts. I do vertical put credit spreads. I also do what's called the iron condor, which is the combination of two spreads, and then what's called the poor man's covered call. So I'll buy a call that's deep in the money, and then I'll sell calls against it. And I did that with Palantir. I bought, I think, 4 contracts at $12. And then I looked to sell covered calls against it. And that's worked out fairly well so far. So that being said, let's jump into the March trades. And now I've created a new spreadsheet. It's not really a new spreadsheet. I took my first planning worksheet from the beginning of March and I pretty much copied over all the trades for the month of March. So it's kind of a combination of all my different planning worksheets. Like in previous videos, I do like to color code things. Currently now the green are any open positions. The blue will be complete, meaning I've closed them. Yellow is at risk or potentially in the money. And I'll talk about each of these as I go through them. I don't want to make this video too long. So will go over some more at the top here. So here's my weekly goals and monthly. And this helps a lot once I come up with new goals and I change these. And then I also have, how I did for the whole month at the very top. It's also summarized at the bottom of this spreadsheet. So let's just jump right into the trade. So I think I had four contracts get assigned to me for Corning, and it's worked out really well. I think they were assigned to me in the low 30s, and now I'm selling covered calls. So I sold 2 covered calls at $35. At the time it was $32.24. I brought in $198. The capital required was $54.08. And it was an 8% yearly return. So one thing I'd like to do is with my covered calls, I try to double the dividend. Corning pays, I believe, pretty close to a 4% dividend. And it's a company I like. It doesn't move much, and it's kind of, like a Coca-Cola. It's a big company that typically doesn't move a whole lot. It seems to move between, say, 28 and 34. Next is ACLS. This is probably my one trade that's a little bit at risk currently. It's pretty deep in the money. I've rolled it a couple times and brought it to lower strikes, but this is vertical put credit spread. The original strikes were 115 and 105. It was expiring on March 15th. The current price was 117. So it was actually out of the money at the time I did this trade. Then I lowered it to, it became in the money. It dropped quite a bit with a lot of the chip makers. So, and that was more recently, but I did roll it where it would be expiring on April 19th. I lowered it to 110 and 90. At this point, all the premium I brought in, and this is in addition to the planning worksheet. So this is all the premium that's been brought in from just this trade alone. And then for this trade, I brought in 152, a rolling of this trade. So the 460 includes the initial premium from when I opened it. And then I added another 152. So it was like, I believe the first trade was right around 308 or 309, something like that. The capital required was 38.47, and that's because I widened the spread. In order to lower this short down, I widened the spread from a $10 to a $20. So instead of 110, 100 or 120, 110, I lowered it to 110 and 90. And sometimes that's a way to actually lower the short strike, because the short strike's what's really important, because if I get a sign, it's going to be based on this 110. And you can see I have 2 contracts. So I brought in almost, I guess, $2.30. So if it gets assigned to me, my cost basis would be like 107 or something along those lines. And I should be able to write covered calls if it does get assigned. Even with the lower amount of premium this time, I still picked up a 33% yearly return. So this is just adjusted for the yearly calculation. You can see it at the top that it was this value divided by this adjusted for the year. So, and it's a chip maker. It kind of has been hit hard because of the lack of interest in EVs. It makes chips for EVs. So actually it makes equipment for the chip makers so I think it's going to rebound at some point. It did before, and hopefully it will again. Currently, again, it's about $10. Well, not $10 in the money. It's about $6 in the money. Best Buy, one of my favorite companies to trade on. It was on back on the 5th. This was a vertical put credit spread. I'm trying to remember if I rolled this. Yeah, I did roll it. So, and I rolled it up because the not strike price, but the stock price for Best Buy went up to 78. So I rolled it up to 70 and 60 strikes, and I brought in another 236. Total premium so far with this particular trade was 595.91. The required capital, again, this is a vertical put credit spread, so it's 2,000 minus the 236.91, and this was like a 67 percent for a yearly return. So again, this divided by this adjusted for the year, and that's how I come up with that. Next is IYR. This is one of my ETFs I like to invest in. I believe it's real estate. iShares real estate ETF. This one is currently in the money by a little bit. I think it's like $82 or $83. But I definitely want this. I want all of these to be assigned. I'm not worried about it. So it would be great if this was assigned to me. At that time it was 89, so it was still out of the money. Like I said, currently with the April downturn, it is a bit in the money. So I kept the strikes, rolled it out from 315 to 621. I brought in another $226. So for all the different trades, 492. Here's the required capital, 1773, and I had like a 43% return on a yearly basis. So, and it, like I said, there's several ETFs that I really like, and IYR is one of them. Now Google, this one is I have closed recently, but at the time it was a 120, 110, and this was just one single trade, 265. And like I said, I think I closed it earlier this week. So when was the expiration? I think it was, 5/17. So I closed it 3 or 4 weeks earlier. So the return's probably even higher. And Google, I believe, is up right around 150, 160. So it had dropped to 133, and I felt like it was a good price there. I really liked the 120, 110. But it became very profitable, so I went ahead and closed it, and you'll see I noted that in blue. Next is GigaCloud, GCT. This has also been a good trade. It was a cash secured put because it wasn't too expensive. Sometimes if the stock's not that expensive, then I'll do a cash secured put. Now, currently, I'm only doing vertical put credit spreads, at least till we get out of this downturn. So if I was to do this again, I might do a vertical put credit spread, but it was for a April 19th expiration. At the time, it was 36.51. I believe it's in low 30s currently, but it brought in a lot of premium. 308. Actually, that's the wrong one. 308.65 for 2 contracts, and it was like a 53% return, which is again because of it was because of a very short DTE or how many expiration days. It was fairly close to the expiration. 3M covered call I wrote 115. At the time they were at 93. I think 3M has stayed right around there. I think it's still around 93. I rolled it. Actually, I believe when I did the first 115 covered call, it had dropped. I believe it was right around 101, 102. It became very profitable, so I rolled it and picked up another $258 in premium. I lowered the call again with it at $93, 105 was still above my cost basis. So if you do roll, especially if the stock has dropped significantly, try to always keep your covered call strike price above the cost basis. So 258.70 is what I brought in. Here it's based on my cost basis. So my cost base is actually, so actually I am below. So that's one instance I went ahead and did it anyway. I'm not sure how quickly they're going to come back. I do still think you should always try to be above your cost basis, but sometimes you have no choice. So next is Micron. This one shot through the roof, and really its numbers don't look that good. Again, it's the hype related to AI, I believe. So it was 85. This was also a covered call. I did it for expiration of 117.25. So I went farther out, and partly because it shot through the roof. I mean, it went up like $20, $30 in a 2 week period. So I rolled it to 1219.25, and I increased it to 92.50 from 85. And this is almost still like a doubling of my cost basis, I believe, which is 11,413, but that's for 2 contracts. And so I was less concerned about the return, but I still did better than, I don't think they pay a dividend. So even, using the DTE of almost 653 days out, I still had a pretty good return. And of course still own the shares. So, and that's one of my biggest amount to bring in for one particular trade, $627. So, yeah, Micron, if it comes back down to a lower price, I think it would be a better buy. But I do think it's a little bit overpriced right now. Their earnings have taken a hit, and I don't quite understand why they've shot through the roof. Now, one of my favorite companies is Zoom. This was a vertical put credit spread. It's currently in the money. It's about $5 in the money. I believe Zoom might be right around 61. So I did this as a vertical put credit spread, 65.55, 32 delta. So a little bit more risk, kind of running the wheel on this. I do want to own Zoom. It's kind of like it doesn't want to be assigned to me. So I did have 100 shares get assigned to me. So I'd be fine if those got assigned to me. I feel like they're a really good company, and they have no debt, and they're profitable, very profitable. And their year over year, they tend to blow out their earnings quite a bit. So at that time they were 67.47. So over the last couple of weeks, they've come down. Like I said, I think they got into the high 50s. I think they got to like 58, but currently I believe they are 61. But I brought in $267, and I went with a shorter DTE. This was 42 days, so 134% return. So I did pretty well with it. More Zoom, I closed and in the money Fidelity IRA. This was a cash secured put that I closed. And then I also closed another one. Actually, this was assigned. So this was the one that I was talking about that got assigned. So my cost basis with it ended up being $66 or so. So I currently own 100 shares. I want to own another 100 shares. And then, like I said, I wouldn't mind owning 400 shares of Zoom. They also have very good covered call premium too. TSM, I think this is the Taiwan chip maker or semiconductor maker. This one I did another vertical put credit spread, 125, 115, a 21 delta. I believe it's come down too, but it's not in the money. It may be like 130, 131, something like that. At that time, it was 141. I did it May 17th expiration, which brought in pretty good premium. Oops, let's not do that. $399, almost $400 in premium. And this again was a really good return. Again, this 2,000 minus the $399, and then adjusted based on the number of the DTE. And the DTE was 67 days, so it's a little bit more than 2 months. Next is Coca-Cola, and I tend to sell a couple covered calls every month in Coca-Cola. Some of these, I own a lot of Coca-Cola, so I'm looking to let some of these get assigned, and just to lower my, and put the money into something else, mainly because these were given to me at a young age, and the cost basis is pretty low, so I don't want to, the income on these or the taxes I would have to pay would be quite a bit. So I'm trying to liquidate some every year. I haven't liquidated any in probably 3 years, but I'm probably going to liquidate maybe 100 shares this year. This was a 33 delta expiring 12/20/24. It was at the time $60.72, so still quite a bit out of the money. I brought in $304, and based on 12,000, again, my cost basis is so low, it's probably a fraction of this. So I definitely was able to double the dividend. They pay around a 3.3% yearly dividend. Now, Surge is a new player for me. This may not work out. This may be a fairly big loss, but I don't know. I'm going to hold on to them for a little while. But I did a poor man's covered call with them at $2.50. They're currently, I think they're like $3.50. At the time, they were at $4.89. The main reason is they're a very good company. They have very good profitability, but they rely on this affordable connectivity program, which went through the Congress. It didn't make it into the last two budget deals, which it provides discounted mobile service and internet service to rural areas where low income people can get, a certain percentage off their bills. It may be $20, $30 off their bills. But again, they have not approved that yet. It's been brought back up a number of times, but again, the priorities don't seem to be in the right place in Congress or in the government. This is something you would have thought would have passed, but I do think they're a legit company. Like I said, they have very good profitability. They have a plan in store to deal with what happened. They're in something like 1,000 retail outlets, and they're still going to provide cellular service as well as internet access for lots of the rural community. And I think they're going to find ways to, instead of relying on the government program, but find a way to potentially offer about the same service. It may have to be a little bit more. But I do think that potentially could bounce back. If not, this will probably be probably not a complete loss. I mean, currently it's $3.50, so probably maybe a 50% loss. But again, if new news comes out or they find a way to deal with life without this government program, they may bounce back big time. They had turned a really good profit. And their return on equity was through the roof. I think it was like over 150 or something. So next is, this is Southern Company. I've owned Southern Company for years. Again, it's a good company. I've got, I believe, 200 shares. Yep. They're currently around 71. So I sold the covered call at 75, expiring pretty far out, 117.25. So what, 9 months, 8 months? And I brought in quite a bit of premium. So even though I'm getting low returns overall, I'm still picking up really good amount of premium to bring in $447.40. Here's the cost basis. It's still like a 5.9% yearly return. And, it more than doubles the dividend. I think they pay like a 5.1 or 5.2% dividend on a yearly basis. So it's like almost an 11% return on a yearly basis just through covered call premium and dividends. Good company. Again, it doesn't move much. It's kind of like Coca-Cola. Next is GigaCloud. This is another cash secured put I did with them, $419, and brought in $447 with a yearly ROI. So it's worked out well too. So another trade that I did with GigaCloud. 3M, this is a vertical put credit spread that I've done. This is again in my Fidelity. It's currently, they've dropped quite a bit. I believe they're in the low 90s, so it's still outside the money. Actually, I closed these, so I did get profitable. I closed it, and I paid $16 to close it. So this is one I had before. So again, I believe it was over 95% profitable. XLE, another one, another ETF. This is the energy ETF. It became very profitable too, and I also closed it for $8 for 2 contracts. So outrageously profitable. And closed it, when was the expiration? 4/19. So believe I closed it on 322. So, or not 322. I know I closed it probably late March. Zoom, here's more Zoom trades. This is my covered call, the 70 for the 100 shares that I own. This is, I believe, yeah, one contract. But for one contract, I brought in $228 just going out to May 17th. So like I said, they have really good premium. Just like their puts, they have really good premium on calls. And so this is the cost basis, the 70 minus the 228. Actually, this is probably a little lower because I forgot to add in the when I sold the put on this originally. I think I brought in like $300, but still, even with this, it's like a 21% yearly return. So Tesla, and this is what I was talking about earlier. I had set up some cash secured puts for Tesla. I did a 145 expiring on May 17th. It was 170.54 at the time. I mean, the premium for Tesla is crazy. I brought in 427. Now, I recently panicked a little bit. One of the podcasts I really like is Invest Talk, and Justin, who doesn't really like Elon, and I don't think he really likes Tesla. He hates Cathie Wood from ARK Invest, and he was really down on them. He thought that they potentially could be a $60 stock before the end of the year. So I panicked a little bit. I did make a few trades recently I bought a put and then I lowered it. I think I lowered the strike in a recent roll to like 140. So like I warned you guys, don't get fearful. And I think he's biased with his dislike of Elon and dislike of Tesla in general, that I probably, now that I know that, and plus it's getting into a range. Of course, it bounced, $15, $20 recently. So it's like 160, 161 again. But it might allow me to go ahead and close that before long. Next is Cisco. Covered call. I have 4 contracts in Cisco. And I did a covered call at 57.50. At the time, it was 49. So these pretty far out of the money. Of course, this is 4 contracts, but I brought in $302. Actually, I rolled it to 920. So this was a roll. So I rolled it from 620 to 920. And did I lower the strike? Yeah, I lowered the strike to 55. And I still brought in over $300. Here's my cost basis for those shares, and did double the dividend. I do believe they pay right around that same amount for the dividend. And you might ask, well, why did I roll something from 621 to 920? And it became very profitable. So a lot of times I will roll if something has become very profitable. But again, rolling is just closing your current position and opening a new one. So the fact that it was so profitable, and it was a good day for the company at that time, meaning they were up quite a bit and their premium looked good. If I can make what I want to make, and I like to make at least 200 a trade. I try to make 100 per contract. So I came close to that, maybe $400. I might have waited, but I believe they've stayed about the same. They may have dropped. They may be like $48 a share now. So Cisco, and so this is what I was talking about earlier. You'll see a lot of these are very different. I trade in more companies, and so one thing with my videos, you can gain a lot of ideas and come up with other companies you might want to look at. Corning. This is 4 covered calls. This was in my Schwab brokerage. So I own quite a bit of Corning. I think I might have something like 8 contracts currently. I have 4 in my brokerage and 4 in my IRA. So I rolled these from 34 to 35. Again, I believe this was another scenario where it became very profitable. And here you can see I brought in quite a bit of premium, $514. And here's my cost basis. And it was like a 4.8, almost 4.9% yearly return. So I've done quite well with the Corning covered calls. IWM is one of the exceptions to my rule. I don't really care if I own IWM. I trade it more often to just make money. like a lot of people do with SPY. So this is one I did late in March. I did a vertical put credit spread, and I've done these a lot. I did a lot last year. Then IWM became really expensive, but if I can do it in the 175, 165, or the 180, 170, then I typically will, because it has good enough premium that you can typically roll it down if you need to too. So this was a April 19th expiration. It was 205 at the time. But I think it had a big down day that day that I made this trade. So I brought in, this is when I closed it. So I paid $13. So the original premium was really good. So I'm getting myself a little confused here. So I actually closed this, and I didn't have to pay much. It was very profitable. I paid $13 to close it. I am definitely trying to make an effort to close these and put the money to play again. Next is ASO. This is Academy Sports, one of my favorite companies to go to. I seem to frequent this local Academy Sports quite often. They're looking to open up a lot more stores, and I think it's a good company to own. Cash secured puts, I sold a 57.50 at the time. It was 64.41, expiring on April 19th. Actually, this was a roll, so I rolled it. It was expiring 4/19. I just rolled it out, same strike, 57.50, and I brought in another 314.60, and I had a total of 717.25 in all the trades. So the first one and then the second one. So I made a little bit more on the first one, and that's usually the case. Like even with this trade, if I didn't have to roll, I probably would have made more like 400, 450. So here's the cost basis, and this was like a 12% yearly return, which is pretty good for a cash secured put. Next is ConocoPhillips. This one I also closed, and let's see what I paid to close it. $8. So again, very profitable, and I closed it. DocuSign, another company I like. I've recently written another one of DocuSign. Now, I'm actually a software developer, consultant, whatever you want to call me. Since I have my own S corp, I kind of give myself my own names or titles, and I'm building a product that will compete with it. So I like to keep track of DocuSign and see what they're doing and how they're performing out in the stock market. So this originally was a cash secured put, 45. I believe they've come down to low 50s currently, but I brought in pretty good premium. And then I closed it at $16. So again, trying to be really diligent about closing these. Now Tesla, this is my other cash secured put. I did this at 150. It was 170 at the time. And I brought in $812 in premium, so quite a bit. So this is the second of the two cash secured puts. So again, I talked about panicking, and this is another one I believe I rolled down and then bought a put to protect it. So next is another Zoom. This is another roll that I did for the 65.55. And I rolled it out to 621, and I kept the same 65.55 and brought in another 319 in premium, which means I brought in 586 in premium total, I believe. Hopefully it's there. So almost $3. So if this gets assigned to me, the cost basis would be like 62. I mean, if it's early assigned. Now, if it's early assigned, I could also sell the $5 put, and that would also go towards the cost basis. So my cost would be pretty close to 60, where I can, probably sell some outrageously good some calls that really have some good premium, or some covered calls that really have some good premium. And here's the capital required, and it's almost an 81% yearly return. So again, it's the 319.49 divided by the 1680, adjusted for the yearly return. Last but not least is CLS. This is another company I like. I'm not sure how to say their name. But they provide AI. I think they're doing AI work in the cloud. Another good company that I found. Actually, this is one of the exceptions that I found, I believe, in Seeking Alpha. They had really good reviews. This was a cash secured put at 40. I do think they've also come down. I believe they're around 42 or 43, but I did it expiring on May 17th and brought in 280.65. Their required capital was pretty high and still had a 25% return. Again, when you have a very short DTE, so the DTE wasn't too long. I believe it was 53 days. And then again, another Coca-Cola trade. This was, I believe, a new covered call that I did on 117.25. Let me make sure. Yeah, this was a new covered call. At the time, Coke was 60.50. And I brought in 418.80 for the two contracts. Again, I'm using the 12,000 for the cost basis. So again, I doubled the dividend at least. Like I said, my cost basis would be a fraction of this. So I definitely, with these, are doubling my dividends and then some. So overall, I wanted to share. I had 30 trades, and I had 9 covered calls, 10 cash secured puts, 10 vertical put credit spreads, 1 poor man's covered call, for a 30 total trades. So about a third were covered calls, and then a third were cash secured puts, and a third were vertical put credit spreads. So, and like I said, currently I'm doing more vertical put credit spread just while we're going through this correction. And for the whole month, just in the monthly premium that I brought in from all the different trades, and this includes, where I actually closed the trade and paid it off. So this summary also includes those negative numbers. And then over here for my brokerage, I did a total of 28.74 and the monthly was 0.5. Again, this account is mostly invested. It's mostly covered calls. And I don't do as much trading. I'm also in the process of building up quite a bit of cash for a down payment on either a building or property. So that originally it was a building, but that's kind of changing. My Fidelity IRA, I did 446 or 4,446 and 80 cents, which is a little bit over a 1% yearly return based on the size of the account. So this is like a $404,000 account. This is like I've got 577,525 in these two taxable accounts. So, and this for the taxable account, it's a little bit low. It's usually more like 0.6, and then the Fidelity IRA is usually lower, usually more like a 0.8 or something like that. And I think these are going to change. So this is where I was talking about my Fidelity IRA. I'm trying to do between 1 and 2. Now my Fidelity Roth, which I actually took a little bit of loss. The only trade I did on my Roth was closing I believe it was the ETF that I closed in there. So and then that account was also locked down. I could not trade in it for the longest time while the funds were being moved from Schwab. So that whole Roth came from Schwab and now is at Fidelity. And it took a little bit longer. I've talked about this in previous videos, and I don't think, like at one point it was showing up in both places. So it looked like the same account, both at Schwab and Fidelity. So I couldn't trade in either. And once that got cleared up, like this month, I definitely have a lot more trades in my Roth. And in that account, I'm trying to shoot for 2 to 3% on a monthly basis. So these numbers will change quite a bit going forward. So the total premium was 73.08. Then dividends, the average, this again was checked both Schwab and Fidelity. And this is fairly accurate, but this is what the monthly average would look like currently, about 1837.78. And the interest, this is mostly Fidelity, maybe 35 of it, 40 comes from Schwab, but it's significant how much interest is coming in through Fidelity. It's, and you see it at the very end of every month. I believe it's usually the last working day of the month. Like I think it was March 28th or 29th where that money was deposited. So the total is 10,170.18, which is probably one of my highest months when you combine everything. I think potentially April may be bigger, but it may not be. Within, I think, it's 500 or 600 with the premium. But I still have 3 or 4 more days. I have today, tomorrow, and Monday through Wednesday to also increase that. I'm not sure if we have any holidays coming up. This is some of the stuff I've gone over before. So moving my IRA, SEP, and Roth took longer than expected, but it worked out. It worked out well. I'm keeping my original accounts at Schwab open. They've contacted me. They're talking about trying to do a similar sweep account like what Fidelity has. I do like their interface better. I do like Thinkorswim better. If by chance they ever get it figured out, I might move my retirement accounts back. Like I said, accounts were locked during the move, resulting in fewer trades. The SEP was moved into existing IRA by mistake, but okay, since SEP is a type of an IRA, accounts were not set up correctly for trading options. So that happened. I had some vertical put credit spreads and then maybe even a iron condor where the inner and outer positions weren't linked. So the put I sold and the put I purchased showed as individual puts. They weren't linked like they were in a strategy, but they were able to fix that. I got someone on the phone and they fixed that almost instantly. Some options positions were incorrect and had to be corrected. Same kind of scenario. There were a few things, but they were all pretty much minor. Fidelity IRA is 3 accounts in one. So I have a lot of people that are like, well, can you show me the performance? And now because of moving these accounts, it's gotten a little convoluted. It's not as easy, but going forward, I should be able to show precisely how I'm doing in both the Fidelity IRA and the Fidelity Roth. And again, I'm looking to do 1 to 2% monthly in the Fidelity IRA and about 2 to 3% monthly in the Roth. And again, Roth was locked down a good bit of the month. So that's it. That's what my month looked like. And again, I'm still working. I do this very part-time. I try to do 1 trade a day. And, since I had 30 trades, that's about accurate. I think we had, right, on some days I might do 2. I think this week I had, like Monday, I might have done 3. And then other days I don't do any trades. The only other important thing I wanted to share is I have noticed with Fidelity that my limit orders seem to go through a lot more than my Schwab account. And a lot of times I ignore them. I think, well, they didn't go through. And then I realized they did go through after the market, is closed to me at some point. It seems to occur. Because of that, I'm probably going to share with my membership when I actually do a limit order, details about that limit order. Mainly because I've been surprised how many have gone through for Fidelity. So that's it, guys. I don't know if you have any questions, comments, concerns. As always, I try to respond to my comments. Please leave a note or a message, or not a note or a message, but leave a comment if you disagree with something I've done, or if you know of a better way to do it, or just if you have a question in general. I like to interact with people. And like I said, I typically within 48 hours try to answer all my comments. So thank you for joining me and look forward to seeing you next time.